Thank you all for attending my monthly webinar with FX Street. FX Street, thank you again for organising this. Okay, it's been quite an interesting week, really, in the FX market. It's been very quiet. Well, it was very quiet since about what we're looking at May. So April, around that time, April, May, that's when the market started going into consolidation. We had those really nice trends on currencies like the euro dollar, the US dollar Swiss franc, the euro pound. And then the market, of course, goes into consolidation. You see, like the markets never move in a straight line. They trend, they consolidate, they trend, they consolidate, right?
Um, where was I? Right. So we had trends followed by consolidations. What we're seeing now is potentially the continuation of trends or the start of new trends. Now, one thing that traders need to embrace is the fact that you've got to have a big portfolio. Why do you have to have a big portfolio? That's because currencies tend to trend in groups. What tends to happen is that when people first come into trading, they focus on a particular currency or a group of currencies. So it may be just the euro dollar. It may just be the majors: euro dollar, Aussie dollar, pound dollar, dollar CAD, dollar Swiss, dollar yen. It may just be the major groups. But there's a whole array of currencies out there. You can see on the watch list, which we're going to go through in a second, where trends move from currencies to currencies. So we had all the dollar currencies moving between September and May. Then the markets went quiet. Now we're starting to see life in the markets again. But what we need to figure out is, where has that life come? Where has it gone? Which currencies are trending? And what you'll notice from today's presentation, that we're now focusing a lot on the pound related currencies: pound Aussie dollar, pound CAD, pound yen, pound New Zealand. Okay, so we're going to go through what was trending, consolidating, and now what is trending. Okay, so let's start with the Aussie dollar, US dollar. What you can see in front of you is a typical chart setup of mine, and people should be familiar with this. What we have in the top left corner is my watch list. Now notice, as I said, it's extensive. Aussie dollar at the top, all the way down to the South African rand, Japanese yen. Top right corner, I have the monthly chart with the major areas of support and resistance that I like to look at. Okay, that's a proprietary tool, by the way, that automatically plots the major areas of support and resistance. Notice I'm doing it on the monthly time frame. What happens is a lot of people go down to a lower time frame. I'm going to ask you guys a question. Going down to a lower time frame to look for support and resistance levels, what is the issue with that? What tends to happen? Can I get some feedback, please, in the group, in the chat box? Right, exactly. Yeah, some good answers coming through. What we see is a lot of noise, because remember, you'll be dealing with a lot more candlesticks. Yeah, exactly. You'll be dealing with a lot more noise, a lot more candlesticks. Okay, and because of that, there'll be a lot more areas of support and resistance. But what you guys have to remember is exactly that: it's noise. Okay, so the monthly chart plots very clear areas of support and resistance. What you'll also notice is that a lot of these support and resistance levels are associated to round numbers. I keep on repeating this, and I'm sure you guys are familiar with this, and I've drummed it to death for as long as I've been doing webinars with FX Street. Round numbers play a very significant part. And remember, round numbers happen every 1,000 pips. Okay, so if we look at the Aussie dollar, US dollar as an example, you notice that the highest point, which is here, is at the round number 1.10. This whole consolidation area was around 0.90. Now remember, round numbers are zonal areas. We can't expect price to always be bang on a level. They're more zonal areas. Remember, trading is an art, it's not a science. Okay, if we look at this pivot low is associated to 0.6. If we look at this pivot low is associated to 0.5. So you can see very clearly how price reacts to round numbers and how these make very clear areas of support and resistance. Right, beyond that, we then have the pink lines. Now, what the pink lines represent is the highest point, the lowest point, and the closing point of 2014. So last year, the previous year. Okay, the highest point, the lowest point, and the closing price. These act again as very significant levels of support and resistance. And you can see that if I expand price, you can see how price has come to that level twice, failed to break through and come back down again. And the downtrend is now showing signs of continuing. Okay, so you can see how this clearly interacts with areas with the pink line levels. Okay, so that's the monthly chart. Okay, monthly chart, major areas of support and resistance. Now on the weekly chart, I have the weekly 200 moving average, which gives me the bias. Again, guys, look, what you guys should be familiar with is the fact that whatever I do every month with FX Street never ever changes. It's the same stuff, right? This is my bread and butter. Nothing changes. I've got the same indicators, the same way of analyzing charts. It's a very simple and straightforward format. Okay, and that's the way trading should be kept. Remember, trading should be simple but not easy. Okay, trading should be kept simple, but it's not easy. And that, of course, comes with the psychology of trading, etc. Okay, but what we have is the weekly 200 moving average, and now that gives me the bias in price action. So when price is above, it's a bull market, and when price is below, it's a bear market. What that means is I only go long above and I only go short below. Okay, I don't go against the bias. On top of that, I've got a trend filter. So the trend filter gives me areas of bullish and bearish trend. So when I'm below the 200 moving average, I want the trend filter to be red. When I'm above the 200 moving average, I want the trend filter to be green. And what this does is it eliminates noise. You'll notice that the trend is down, but it's not continuously down. We have a breather here. Trend, breather, trend, consolidation, trend. But throughout that whole structure, the trend filter has remained red, saying that the long-term trend is bearish. If I go to the daily time frame, I've got exactly the same setup. I've got the daily 200 moving average, again, which gives me the bias. So bullish above and bearish below. I've also got the trend filter, giving me areas of bullish and bearish trend. Now notice that when the weekly chart is going through consolidation, it remains red. However, when the daily is going through consolidation, the trend filter changes from red to green. That is because there's a lot more candles, and so there's a lot more noise. So imagine if you're going down to the 4 hour, the 1 hour, the 15 minutes, how much more noise you have to deal with. The daily on its own is quite noisy, and the trend filter is highlighting that. What I'm looking for between the weekly and the daily is for the trends to be in alignment. So I want price to be below the weekly 200 average and the daily 200 moving average, and I want the trend filter to be red on both the time frames if going short, or I want the trend filter to be green if I'm going long. Okay. When do you add to your positions in your style? It depends on. There's a question that's just come through, which is when do you add to your position? So I'm well known for compounding and adding to my positions when I'm in profit. That's fundamental to achieving growth. There's two styles of trading really. You can go in and out, in and out, in and out. It's that kind of day trading, shorter term approach. I don't really advertise that, and I really actively try and get people to get away from that. The second way of doing it is by holding your positions and letting them run for a long time. Okay, now the questions coming through are how do I add? And I can answer two of these in one go. It depends on what the trend is doing. Okay, let's establish this now. Okay, if we look at this chart on the daily time frame, okay, so if we ignore the daily 200 moving average, if you look at it from here to here, we can quite clearly see that the trend is down. Okay, we can see quite clearly that the trend is down. However, does the structure allow you to trade breakouts or pullbacks? Let me ask the group. Does that structure prefer you to trade breakouts or pullbacks? What do you think? Okay, any ideas, guys? Breakouts, both. Okay, some good answers coming. Okay, the answer is not both. Okay, what people really want to get away from is thinking that pullbacks are the way forward. Pullbacks are not the way forward. Breakouts are the way forward. The thing about pullbacks is that they're very subjective. How do you know it's a pullback? How do you know it's not a trend reversal? Yeah, how do you know it's not going to get you stuck in consolidation? There's all of these variables that come into trading when you're trading breakouts. However, with breakouts, there's only one variable. Is it a fake breakout or not? However, when there's a trend in play, and a trend has established itself, it's very unlikely that it's going to be a fake breakout. You've got more chance of it being a breakout and a continuation than a fake breakout. And this is a very good example. And the answer, guys, is for this kind of structure, you want to be trading breakouts. The reason, because the pullbacks are not clean. Trend, consolidation, trend, consolidation, trend, consolidation. Can we see that, guys? Yeah? Okay. So that is not suitable for a pullback. That is suitable for a breakout. So if my first position is on a breakout, I will then compound on breakout. So whatever my first position is, that dictates what my second position is. So I compound on breakouts, okay? Now let's have a look at another currency. Let's see if I can find one. I believe the Swedish Singapore dollar might be a good example. Okay, here we go. Right. Now, let's have a look at this structure. Having a look at this. Now, look at the pullbacks. See how clean the pullbacks are? Right? Is this suitable for a breakout or pullback or both? Answer the question, please. A breakout, pullback, or both? What do you reckon? Okay. Thank you for putting your neck on the line, guys. Yeah. Okay, good. The correct answer is that you're all correct. You're all correct because you can trade breakout, you can trade pullback, and you can also do both. The secret is this: you have to split your money into two different accounts. So let's say, for example, you've got large accounts. Let's say, for example, you've got £50,000 in one account, you've got £50,000 in another account. In one account, you can trade the same currency on pullbacks, and on the other account, you can trade the same currency on breakouts. So what you're doing is you're doubling up on the compounds. You're not overexposing, first of all. Remember that, because you're trading separate accounts. You're still within your money management system. It's just that you trade breakouts on one account and pullbacks on the other. So a trend like this, you can squeeze out maximum profit by trading both styles. Is that clear? Can I get a quick yes that you guys understood that? Yeah? Yeah? Okay, fine. All right, so you guys have to, that's okay, you're welcome, right? You guys have to be really sort of sharp with what the structure is doing. This is what I keep on telling people. Always let price dictate what to do. Never try and predict. Everyone's always in a rush in trading. They always want to make money. They want to get in, get out, right? But what people need to embrace is the natural rhythm to price. And what you'll notice is that trends appear, but the way that particular currency is trending is different to another one. We've just seen two examples. Now let's have another example of a trend that is currently in play. Let's have a look at the pound New Zealand dollar. Okay, I'll open up the daily chart. Right, now you guys tell me, look how quickly this is moving. Is this allowing you to trade pullback? Ignore what's happening. Ignore that last bar for now. Ignore that correction. But between here and here, has this allowed you to trade pullbacks or just breakouts or both? Yeah. Any other answers, guys? Yeah. Okay. Brilliant. Right. Yes. Yes. Exactly. The answer is breakouts because the pullbacks are not deep. We want to have a clean pullback. This is the thing about pullbacks. Pullbacks have to be clean. They have to pull back to a certain level. It has to pull back to a good. If you're in a bull trend, you want price to pull back to a support level. Let's say, for example, 2.1 is a round number. If it breaks 2.1, pulls back to it, and it's a nice clean pullback, that's a potential entry point on a pullback because you're using the round number as a support level. So there's a very good chance now that it's going to bounce from the support level. You don't want to just randomly take pullbacks at any particular level, because at any level, it could be a reversal. You always want to have the odds in your favor. Look for a good entry point. Okay, right. I've gone off topic a little bit, but that's fine because the questions have come through. Would you also please look at New Zealand dollar, Canadian dollar, since it has just crossed below 200 weekly move and is trending well, it seems. Okay, well, let's have a look at that. New Zealand dollar, Canadian dollar. Right, if we start with the monthly time frame, okay, looking at this particular currency, would you say that it has a history of trending well? Would you say it has a history of trending well? Yes or no? Yeah? Okay. Okay. It has trends. Now, the next question is, would it be an easy ride or a bumpy ride? Yeah, exactly. So this is one thing that you guys have to always engage. Look at what the monthly chart is telling you, right? Yeah, exactly. Deep pullbacks, long wicks. Look how wicky the candles are. So lots of noise in that month. So even though the trend is up, it's not going to be an easy ride. So that for me would be a reason why I would not be in a rush to trade this particular currency. Okay, but if we go to the weekly time frame, we can see that price is trading below the weekly 200 moving average. Guys, look what it's doing. It's doing the classic behavior of price. Can anyone tell me what that classic behavior is? Looking at current price action, what is that classic behavior? Right, beautiful, thank you. Break of a support level, which becomes resistance, come back to retest. We want to see this level hold strong as a resistance level. A break below here will suggest a continuation. However, we want to be a bit careful. Yes, correct, everyone. Right, retest retracements, yes. We do have the round number 0.80 acting as a support level. So by the time it breaks from here to here, you're only looking at about 200, 250, 300 pips. For me as a trend trader, that's not a large amount. A lot of people out there would think that's a lot of money and a lot of distance. For me, 200 pips, 300 pips doesn't do anything. I'm looking for thousands of pips. Okay, so I personally, if I was looking to trade this, I would wait for 0.80 to be broken. Then I would think about shorting this. But for now, this is not something that I want to be trading. However, also, if we look further than that, guys, if I bring up my support and resistance tool, we've got a support level there. 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 Can you see the amount of levels that will potentially cause disruption? So for me, this is not a very good looking chart. Okay. If we go to the daily time frame, we can see that is trending quite well recently, though. Again, look at the move, retrace, and then weakness. Okay. So guys, if you do want to trade this, because you feel like it's set up and it's a good currency to trade, you can, of course. Based on past history, we know it's going to be a bumpy ride. So the thing to do, what would you do with your risk? You know it's going to be a bumpy ride. What would you do with your risk? Full risk, half risk, reduced risk? Right, exactly. Reduce your risk. So always think about that. Always think, right, look, there is a potential that I'm going to, right, you could use wider stops and you could reduce your risk, definitely. Okay, so you always want to look at past history and then let that dictate how you are going to apply risk to any trade that you take. All right. I think that's all the questions that was good, guys. Thank you. Thanks for that. Okay. How many pips do you trail? Okay, FX Boyki, this is a repeated question every month, okay? Certain things I don't talk about. Okay, stop losses, how exactly I compound, I don't talk about that. I have to always be respectful of people in my community who actually come to me for training and ask for that kind of information. So I cannot just give that kind of information away. All right. But the answer to your question is this. In general, ATR, and I've said this before, okay, a lot of people have very tight stops, 10 pips, 20 pips, 30 pips. It's ludicrous. It's absolutely ludicrous. Even 100 pips sometimes is not enough. Why? Because you need to look at the ATR, look at the average true range. So let's have a look at this particular currency, right? If I go into the back end of my software, right. So I have a tool that I can bring up very quickly that will tell me what the average true range is on this particular day, over the last 5 days, over the last 20 days, over the last 60 days. All right. So if we look, what is the average true range on this particular currency per day? What are we looking at? 148 pips. So if you have a trailing stop loss, or if you have a an initial stop loss or a trailing stop loss of less than 148 pips, what do you have a chance? What do you carry a very strong chance of happening? I'm sorry, I just need to go down a little bit. Right, thank you. Right, okay, good. Okay, perfect. Exactly. Exactly. You carry a very, very strong chance of being stopped out. Right. How can I explain this? A trend is a function of time. A trend is a function of time. You guys have to remember that and absorb that. A trend is a function of time. If you eliminate time, you eliminate the trend. If you eliminate the trend, what do you eliminate? What do you kill? The chance of making. I was hoping someone would say money. Okay, it never came. That's okay. Fine. I was hoping for money, right? If you eliminate time, you eliminate the trend. If you eliminate the trend, guys, you eliminate money. And ultimately, we trade to make money. All right. I don't care what anyone else says out there. Oh, I enjoy it. I enjoy sitting in front of the screen. I enjoy looking at candlesticks. No, you don't. That's a story you've been telling yourself because you can't make money, right? I hear that all the time. By embracing the natural rhythm to price and looking at things like ATR and having wide stops, that is a good way to trade your stop loss. Does that answer your question, guys? Does that? I hope that makes sense. Yeah. Okay. Okay. Great. And remember, guys, the turtle traders did this. Are you guys familiar with the turtle traders? Yeah. No. Okay, Jay, you need to know who the turtle traders are. I'll just type in a book here, Way of the Turtle by Curtis Faith. Okay, have a read of this book. This is essential reading for anyone who wants to get into trading. Someone just asked me if I am on Instagram. I am on Instagram. I've changed my name though. fx.mentor. fx.mentor is my Instagram name. Okay, guys, remember the turtle traders. That whole experiment which happened in 1982 is fundamental to how trading should be done. It's a story that anyone and everyone who wants to be successful in trading should take inspiration from. Okay, in short, the short end of the stick is a group of novices that were taught to trade by Richard Dennis, who is an expert trader back in 1982. He taught a group of traders to trade in 2 weeks. And over the next 4 years, they turned over almost $200 million. And they were long-term trend traders. Okay, so what does that tell you? Let me ask the group. If Richard Dennis, who made his money in the 70s, the turtle traders who made their money in 1982, so in the 80s, and us and me now in 2015, I'm using that kind of philosophy, long-term trend trading philosophy. What's changed about making money in trading? What's changed? Everything or nothing? Right. Nothing's changed. Now, of course, certain market conditions have changed. But we may have shorter trends. We may have more fake breakouts. So certain things may have changed, but the application of trading, having that long-term approach, it hasn't changed. Look at Warren Buffett. He's 80 years old. He's amassed 80 billion. He started with modest beginnings. He didn't start with millions of pounds. He started with modest beginnings. To amass that kind of wealth, you have to be long term. He's a long term investor. Okay, he's a value investor, but his philosophy of holding and compounding based on fundamentals is exactly the same as mine, which is holding and compounding based on technicals. The approach and the philosophy is exactly the same. Jim Rogers, exactly the same. George Soros, John W. Henry, the guy who owns Liverpool Football Club. I don't know if you are familiar with him. Get to know him, John W. Henry. He was a trend trader. So all of these guys who've amassed huge amounts of wealth have all done it through long-term trading or long-term investing. This idea of, excuse me, this idea of sort of short-term trading has really come about because of the internet. And because the internet gives us software, it gives us market data, we've got brokers where we can easily open accounts and we can use free charts and 5-minute time frames. Because of that whole philosophy of day trading is so accessible, people instantly gravitate toward that and think that's the way forward. But what you need to do is take a step back and look at the guys who've actually made it. Look at their approach and think about how they did it. So the way of the turtle is a fascinating insight into how money was made through trend trading in 1982. And guys, just to give you a bit of a background, my mentor who taught me how to trade, he was trained by one of the turtle traders. Okay, so my mentor was trained by one of the turtle traders. So you can see where the philosophy we have comes from, the roots. We've been trained from the source. Okay, right. And the reason why I mentioned that is because they used ATR. I can't remember what they used, ATR 30 times 3 or something. The strategy the turtle traders used is in the back of the book. So you can see the stop loss that they used. Okay. All right. You're very welcome, guys. You're welcome. Okay. Sorry, we're going off topic. So let's quickly do a bit of analysis. Okay. How can we emulate or get a copy of the indicators? Okay. Look, the indicators and everything that you can see are proprietary. That means they're mine, their community. If you want access to this, please get in touch and we can talk about it. Okay. I'm going to type my email now because I usually forget at the end of the webinar, okay? But if you guys want to email me about anything and everything, please contact me here, zaheer@tdtpro.com, okay? Please email me and I'll give you complete breakdown of the software that I use, eSignal, the tools, the training, whatever you guys are looking for, okay? We cover all the bases, all right? So don't hesitate. Okay, pound Aussie dollar. Let's do some analysis. Long-term trend, bullish. Price is trading above this whole support level, which are the pink lines, and also the major figure of 2. Long-term, I would like to see price move towards 2.5. Right? These are round numbers, 2.1, 2.2, 2.3, 2.4, but 2.5 is what I call a major half figure, a major level. And so I'd like to see price move towards that level. If we look to the left, we can see it's been there before. And quite clean. The trends are quite clean compared to the New Zealand dollar, Canadian dollar that we looked at before. You can see it's quite clean. So we should expect price to establish a nice clean trend up to this level. Long term, we can even expect it to move towards 3 because it's been that high back in 2002. So remember, that's what technical analysis is about. Technical analysis is looking at past behavior to kind of assume what could happen in the future. And if the trend is up, that's the direction we want to be going in. If we go to the weekly time frame, we can see that price is trading above the weekly 200 moving average. The trend filter is green, suggesting bullish strength. And if I go to the daily time frame, we can see that price is trading above the daily 200 moving average and the trend filter is green. Everything is suggesting bullish strength. However, why, and I'm going to ask you guys now, why is it too early to go long? What do we need to see cleared? Yeah, breakout above. Good. What level? What level do we need to see breakout? Right, perfect. Thank you, JS. Right, spot on. 2.1 is a round number. And we can see that price is reacting to that because it's currently heading down. Now, this is not a trend reversal. This is, I must instill this into people. This is not a trend reversal. This is where people are looking to go short. This is where everyone, this is where, this is what is called tree shaking. Okay, this is where a lot of people get involved. They get sucked in. And then that's when the big dogs, the hedge funds, they come in, they move the market. Okay, we want to be really smart with how we trade. We want to be patient. We want to wait for the big dogs to move the market. Then we want to jump in. Now is not the right time to go short. And it's not the right time to go long. Why is it not the right time to go short? Because everything is suggesting bullish strength. Above the 200 moving averages, and the indicator is the trend filter is green. If we're above the 200 moving averages, that means the institutions, the market makers, they're looking to push the market up. We don't want to go against that bias. We want to be with them. They're the market makers. It's too early to go. It's too early to go short because we've got 2.1 acting as resistance. So what we're looking for is a break, a retest of this level, and then the next breakout. And that will be your entry point. Is that clear, guys? Can I get a quick yes? Yeah. Okay. Fantastic, guys. Remember, trend reversal trading is short-lived. I know there's a lot of people who like to try and pick tops and bottoms, but it's a very difficult way of trading. It's very difficult and it's unnecessary. It's unnecessary. Far easier to go in the trend and compound. Every time it breaks out, add a new position. Breaks out, add a new position. Compounding is far more powerful than just taking little bits of profit going against the trend. Okay, so patience on the pound Aussie dollar. Let's go to the pound Canadian dollar. So, guys, remember, I'm looking at currencies that are on my watch list. How far should it move above 2.1? Okay, that's a good question. That's a good question. It's got nothing. I couldn't say that because I don't know. But what I'm looking for is simply a break, a retest, and then the next breakout. So wait for price to dictate that. That could be 50 pips, it could be 100 pips, it could be 200 pips, it doesn't matter. Okay? Who are the big dogs? Good question. All the institutions, the market makers, the hedge funds, the guys with money. And we're talking about billions and billions and billions, right? Okay. Yeah, I'll give you the Instagram link in a second, FX Boyke. Okay, let me just get through this analysis. So where were we? Sorry, pound Canadian dollar. Let's go back to that. Okay. I'm just going to open up the chat box again. Guys, I'll tell you what, you tell me. Yes, no, or stand aside. Yes, no, or stand aside. What do you reckon? Yeah, perfect. Okay, good. Thank you, Addy. Yes, exactly. We've got the major figure of 2 acting as resistance. Look at this month's bar. It's indecision. It means it doesn't know what to do. We could see price come crashing down, but the fact that the long-term trend is up, that's the bias. We want to be going in that direction, but not until it breaks 2. Weekly time frame, above the weekly 200 moving average, trend filter is green. Daily time frame, above the daily 200 moving average, trend filter is green. Everything is suggesting strength. Look at what price is currently doing. If I just, if I just get this tool here, right, look again, guys, classic break, retest, indecision, potential strength to the upside, close and break and close above 2, and we want this same formation. We want price to break and close above 2, retest this level, next breakout. Don't be in a rush. Don't be in a rush to get in. Why shouldn't we be in a rush to get in? Because if we go to the monthly time frame, if it breaks 2, where could we potentially see price move towards? Where's the earliest place that we could see for price find resistance long term? Looking at this chart. Perfect. Thank you. Yeah. 2.5 ideally, yes. But look at 2.3. The fact that we've got a level here, this is sort of around 2.4, so somewhere between 2.3 and 2.4. This is where we would expect price to move towards. You're looking at between 3 to 4,000 pips. The distance between here now and the figure 2 is only 400 pips. I am happy to wait 4,000 pips. I'm happy to wait 400 pips to target 4,000 pips. That's the logic. I'm happy to stand aside on 400 pips to then be able to target 4,000 pips in a much safer way. There's no point me getting in and then getting stopped out. And if we look at the trend here, look at this trend, guys. This trend went from around 1.5, where it found support, all the way through to 1.8. 1, 2, 3, around 3,000 pips. So that was a very profitable part of the trend for me, which was back in 2013. So there's a very good chance it's going to do that again. Okay. Someone's asked me quite a few times to go through the Canadian dollar. The analysis on the Canadian dollar is very simple. Okay, you guys tell me yes, no, or stand aside. Right. Yeah, stand aside. What do we need to see clear? What level do we need to see taken out? Right, perfect. And if it clears 1.3, if it clears 1.3, where could we expect it to go to? 1.4. Yeah, thank you. Spot on. Right. 1.4, yes, first sort of area, but long term, we would potentially see price go to 1.6. So if it clears this level, this whole resistance level, we've got about 3,000 pips for it to target. Yeah, exactly. Okay. Pound yen. Excuse me, not that one. Pound. Where's the pound yen? Pound yen. Right. The pound yen's been misbehaving this week, which has scared a few people. Trend up. Look at how it's reacting. Now, the reason why it's reacting because it's in close proximity to 200. 200 is acting as a resistance, and we've seen that potential. What do you call it? Bearish engulfing candle. However, we've got the pink line acting as support. It's basically stuck in no man's land. Exactly. Now, trend is up. Trend filter is still green. We had some unusual gapping at the start of last week. Yeah, we had some unusual gapping. And you can see that is more evident on the daily. We had some unusual gapping. And that led to a move to the downside. Now look at what's happened. The bias is still bullish, but the trend filter is red. So the weekly is saying bullish bias, bullish trend. The daily is saying bullish bias, but bearish trend. Stand aside. I think we can all agree on that. Okay, this is now in no man's land. Okay, last current. Well, we look at one more after this, and then we'll call it a day. Right, pound New Zealand dollar. We can see that the trend is currently bullish. Okay, it's been a little bit choppy, not so great. But remember, the longer the consolidation, the bigger the breakout. The longer the consolidation, the bigger the breakout. And you can see that after being stuck in consolidation pretty much since 2010, you're looking at 5 years of consolidation. This is looking to move. However, there are resistance levels in the way. We've got this resistance here. We've got 2.5. If it clears this level, then we could expect it to go to 3. If it clears this level, 3.5, potentially 3.7. Weekly time frame, above the weekly 200 moving average, trend filter is green. Daily time frame, above the daily 200 moving average, trend filter is green. Okay, so at the moment, if you're not in this, wait for potential what we could see as a support level, maybe a double bottom like formation, a move back to the upside, a break and a close above here, and we can see a continuation. Okay, the last currency I'd like to look at is the New Zealand dollar. Okay, now New Zealand dollar is a currency that I'm in, and I have multiple positions running. You can see that we had a trend to the downside, consolidation, trend, price is trading below 0.70. We'd like to see price now move towards 0.60, 0.50. Weekly time frame, trading below the weekly 200 moving average. The trend filter is red. And on the daily time frame, trading below the daily 200 moving average, and the trend filter is red. What we've had yesterday was a move against trend, but it's a small, insignificant move compared to the main trend. We've seen moves like that before. There's one there. There's one there. These are called flag formations. There's another one there. So there's a flag there. There's a flag there. There's a flag there. This is nothing more than a flag. What people need to remember is that a flag is a continuation pattern. This is where a lot of traders panic because price is going against them. But this is where I hold. I'm patient. I'm patient because, as we've already established, the trend is down. Everything is suggesting continuation. It wants to move to 0.60. Now that this is flagged, when it breaks out, what will it give me the opportunity to do? What am I waiting to do when this breaks out? Right, exactly. I'm going to start compounding. Guys, I've already got 4 positions running along this trend. My first position went in when price broke below 0.70. So I add quite aggressive. So my logic is to add very aggressive at strategic level. and then allow those compounds to run all the way through to the next round number. I then tighten my stops at certain levels. If I get stopped out, I get stopped out. If I don't, the trend continues. And I'll give you a very good example of that. Just so, and we'll finish up on this. Okay, and this is the euro dollar, which most of you guys should be familiar with. But look at the euro dollar. Okay, if we start on the monthly time frame, we can see that we had several months of weakness. 1.4 round number acting as resistance. Price went all the way down to 1.1, where it's now finding an area of consolidation. So you're looking at 3,000 pips. Okay, on the weekly time frame, price is trading below the weekly 200 moving average. Trend filter is red. Now, I started shorting this. My first short position was when price broke 1.3. Notice that the trend started at 1.4, but I didn't enter until 1.3. In hindsight, everything looks good, guys. Remember that. Everything looks good in hindsight. Oh, we should have got here. And if someone said to you, I predicted this correctly, they're talking a load of nonsense. They got lucky. Okay, so I got in just below 1.3. If we go to the daily time frame, price is trading below the daily 200 moving average. The trend filter is red. Now, I started shorting around September. I got 5 aggressive compound positions in along this part of the trend. I got stopped out when my trend filter turned from red to green. So I entered around 1.3. I got stopped out around 1.1. Just to give you an idea, this is a move of 2,000 pips. But through multiple lots and through multiple compounds, I leveraged the 2,000 pips up to 15,000 pips. Okay, 2,000 pips to 15,000 pips. Now, the question that I'm going to ask you guys is, if I can leverage a trend like this to vast amount of pips and percentage return, how many trends do I need a year? Only one to beat the bank, spot on. Only one to beat the bank, but you get at least 2, 3, 4 of these trends in foreign exchange. You get at least 2, 3, 4 of them in stocks. Yeah, if I give you an example of a stock that I'm in, one of the stocks that I'm in that's performing quite well is Disney, right? And you can see that when Disney gapped through 100, you can see now it's now slowly edging up. Okay, another stock that I traded and I recently got stopped out of was KR. Can you see that nice trend on KR and then getting stopped out? Yeah, another good trend that I recently got stopped out on is AET. You can see nice stop and then got stopped out. Okay, because I use guaranteed stops, any kind of gapping I'm protected against. Okay, so what does this tell you? What this tells you is that foreign exchange should not be the only currency, the only thing on your watch list. And someone's asked me, how do I filter out the watch list? Guys, if you don't have the software, you'll find it very, very difficult to filter out software. Okay, right, I've just got a message saying that I've got to wrap up. Okay, so guys, thank you. I'm going to have to call time there. Okay, yeah, I'll just send you the Instagram link. Okay, there's my Instagram link, guys. Twitter. Okay, I'm not very active on Twitter, but here's my Twitter. Okay, guys, have a good day. Thank you all very much for attending. You're welcome. Take care. Bye-bye.